I personally think that Bitcoin is worthless, Jamie Dimon say. Why Jamie Dimon, Warren Buffett hate Bitcoin? The short answer is they cannot manipulate it, but they can expand bank credit, which is sort of like a money for us as a deposit in the bank, and that make them fabulous rich, and also save them in the crisis like the great financial crisis. Let's look at the balance sheet of JP Morgan. This is the annual report financial statement, the latest for the year 2021. Now let us see how they actually make money. One of the revenue is actually investment banking fee. This investment banking fee in the year 2021 was 13 billion, which is much more than 2020 and 2019. The reason for the big increase in the investment banking is due to the more IPO, more security issuance by company, money rising by company, and this actually was because of the credit expansion and the QE by the Fed. Let us look at the money supply or the credit expansion, the M2. You can see that in the year 2020, during the pandemic, due to the credit expansion by bank, the M2 supply actually increased tremendously, and this increase actually helps them in their investment banking fee. As my last video, Bitcoin actually stopped money thefts by property company and commodities printing. And bank actually help this money theft by properties company and by credit expansion. You can refer to my last video how all these property company will actually debase your money. But in short, what happens is that when money supplies increase tremendously, like in the year 2020 and 2021, it actually monetize bond, property, stock above their economical intrinsic value, and this increase in the money supply or credit expansion helps them, because think of it this way: when the valuation of the stock actually increases, what does a company or CEO do? Well, if I can sell something if something is $1 and can sell for $2, I'll definitely want to sell more, and so that's what they do. So when there's a increase in money supply, people put more money in the stock. Well, companies will naturally issue more stock, and this actually in the end will actually bring the stock value down and cause people to lose their money. But this definitely helps to improve JP Morgan or the bank's income. The next we can see is card income. Card income is 5102. This I think naturally arise from Visa Mastercard monopoly payment system, where they charge about 2 to 3% on every transaction, and banks being an issuer of credit card will take a big cut. Well, Bitcoin being an open payment leverage on the Lightning Network will actually bring down all these fees to a much lower, maybe 0.01%. So definitely banks will not want to see Bitcoin actually success, because this also will bring down a big portion of their revenue. The next one we take a look is interest income and interest expense. If we look at it, the interest expense is very low, 5 billion compared to the interest income. The very low value you can see over here. If we look at the most recent December 30, 2022, For Bank of America, Bank of America over here, their interest rate is only 0.01%. So, well, without a very good form of store of value for money, people will only have to save their money in the bank, and because the bank can control the interest rate they pay, well, people will have just to accept a low interest rate, and this low interest rate cannot make up for the debasement of the money, which I will show later. So this is another form where bank actually make a lot of money by paying the interest rate below the, I would say, below a rate that is fair to the depositor, who is actually because of their money printing is actually losing their money about 2 to 3% every year. Okay, the next one we see is provision for credit loss. Over here, how did this arise? Naturally, the bank has an incentive to bring it up as much as possible, because they want to make more money, so they do not want to lose money. This arises due to the loan that they make. In the bank balance sheet, there's the liability. The liability will be the depositor deposit, and that is a liability. So in one sense, for a bank to make money, their asset, if it's always higher than the liability every year, there's an increase, well, they will make money. So the tendency is to make the liability smaller, but then you can't really, because you can't tell the customer if there's a $1 in their bank account, it becomes 90 cents. Nobody will deposit there. So it's difficult to actually lower the liability. But one way they can do is, instead of doing that, they can expand the credit or money supply, and this actually effectively lower the value of their liability or the deposit in terms of compared to the asset. So when they actually print more money, what happens is that the asset or the loans the bank actually made, and this loan actually represent factories, buildings, capital, properties. So when they print, they monetize all this infrastructure, all this capital, all this loan, and the loan actually went up. And when they did that, they will actually naturally do not need to provide a higher value for credit losses, and this also helps in their revenue or their income. So if we look at this, the bank actually makes money by charging an interest or extracting a portion of the GDP by companies in the economy that is charging an interest, and paying from the interest that they charge, paying a portion to people who actually provide the capital for all this loan. That is the main purpose of a bank, to facilitate saving for productive enterprise. But another venue for them to make money, if we look at this, is their balance sheet manipulation. What do I mean by that? That means the continuous debasement of their customer deposit, lowering the value compared to tangible asset like properties, like equities, or even what you buy, inflation. What I mean by that is like maybe your goods and services, they lower the value. So in one sense, they also make money by devaluing or debasement of their customer deposit. Okay, what do I mean by this? So we can see that for the bank to make money, the most easy is always to increase or expand the credit or the money deposit. Bank actually facilitate the debasement of money through credit expansion and suppression of interest rate. Let's look at this statistic I have. I got this statistic from the website where I took 40 years of data, and I got this inflation of 3.15%, where every year the inflation is increasing by 3.15. The money supply, M2, which actually includes bank deposit or credit expansion, is 6.47. The nominal GDP is 5.11. The real GDP is 2.65. So we can see that the actual goods and services that increase every year is about 2.65. But we have an increase in money supply of 6.47. So naturally, we have an inflation of 3.15. So that means the deposit that you put in the bank actually lose value of 3.15% every year. But if let's say the interest rate can cover this, well, of course, then it's fine. But as we can see just now, the interest rate is almost 0%. So we have some sort of like a financial repression where the interest rate is higher than the inflation. The deposit you have with the bank is an actual loan to the bank. The bank further use this deposit to lend to companies or individuals. Hence, these loans are not risk-free and warrant an interest rate to reflect the risk. But the depositor has never been compensated a higher risk because the bank will say the deposit is safe and there's no further credible store of value like Bitcoin to compete with the banks. So banks are rewarded when they make a risky loan, but when the loan sours, the central bank will bail them out by printing money. The printing of money will debase depositor money, hence the depositor is not rewarded for the loan they make to the bank, and when the loan sour, they are punished with debasement of money. Years. In fact, the late JP Morgan, if he has been alive today, I believe he is definitely a Bitcoiner. In his testimonial before Congress in 1912, American financial and investment banker JP Morgan stated, "Gold is money, everything else is credit." Everything else means the fiat money, the government issue, the deposit in the bank, the stock equity, the bonds, the treasury, everything is a credit, or they are security. That is, it can be debased, it can be manipulated, it can be default on, and there's a counterparty risk. So there is a economical and intrinsic value, but they should not have a monetary value because it is always in control by someone else and not by you. So that's why everything else is a credit, and they should have only their intrinsic economical value, but they should not have add a monetary value, because once you did that, someone can manipulate, and sooner or later you will lose the monetary value that you are used to store in this instrument. And that's why he say gold is money, because gold as a commodity, there's no issuer, there's no one to really control it. But now in the last 14 years, we have Bitcoin, and Bitcoin is a much better form of gold to store money, because as we know, gold actually expands its supply every year by 2%, and the more you monetize, the gold miner will actually expand it even more, which is getting more and more like a security, and would not be a form, a very perfect form of store of value. I hope that we can return banking to its respectful profession of channeling saving to productive enterprise, instead of a casino for speculation, a venue for financial repression, as we have seen for the last 40 years, and income inequality, because through this financial repression or the expansion of credit, well, most people who store their value in this instrument, like stock, bond, deposit, fiat currency, etc., sooner or later will have their monetary value lower, and this only benefit those who actually issue this or control this instrument, which is only a selected few, and this cause more and more income inequality. And I hope we can use banking to bring prosperity to the mass, instead of benefiting the few rich connected individual, but make most of its depositor poorer. And now we have a Bitcoin bounty commercial. On 29 November 2022, someone hacked my PC and stole about 62 Bitcoin from my PC. It was during a Skype message. A PDF file was sent to me. I do not know the identity of the person that sent me the PDF file, but unknown to me, it is an MS-DOS masquerading as a PDF file. Once I click on it, it wiped off my Electrum Bitcoin wallet on my PC, and it sent the wallet to the hackers. 3 of my wallet containing about 62 Bitcoin was stolen. You can see the Electrum wallet here, and that the Bitcoin that was stolen. This is the one of the wallet with about 31 Bitcoin. This is the second wallet with about 15.75 Bitcoin, and this is the third wallet with about 15 Bitcoin. You can see here it was stolen on the 29th of November. And here are the blockchain detail of the stolen Bitcoin with the address where the Bitcoin is sent to. For the first one with stolen 15 Bitcoin, this is the URL of the blockchain transaction, and it's stolen and sent to this Bitcoin address with the transaction hash ID here. The second one, 15.75 Bitcoin is stolen. This is the URL of the stolen transaction and sent to the Bitcoin address, this with the transaction hash ID of this. And another 31 Bitcoin, this is the URL of the blockchain transaction, stolen and sent to this address with the transaction hash ID of here. All this detail I will put in on the detail of the YouTube page. I know the chance of getting back this stolen Bitcoin are 0. I hope this will serve as a record, so that in the future, maybe we can trace to the thief who actually steal the Bitcoin. This also serves as a Bitcoin bounty. If anyone is able to trace it and leads to the recovery of the Bitcoin, I would like to pay the person 15% of the recovered Bitcoin.